Hello and welcome. You're watching Countdown right here on BloombergQuint Live. It's a volatile session. India VIX has crossed 72. We're back into the red for the indices. We'll take you through a lot of more market commentary, but for the headlines in the time being. Indian markets take a turn for the better as both Sensex and Nifty trade at the day's high. Private lenders lead the recovery for the Nifty, but again, now they've slumped. It's a mixed open for European markets after the announcement of ECB's 750 billion euro booster package. No respite for Asian markets as the sell-off continues. The rupee drops below 75 to $1 for the first time ever as the sell-off in equities and bonds continues. Crude oil prices rebound after hitting an 18-year low as global economies feel the impact of the coronavirus pandemic. Gold prices inch higher after the ECB announces a fresh stimulus package for the Eurozone economy. Good afternoon, Neeraj. It looks like we're back into the red now.
Yes, we are, and it's not the banks. The Nifty 50 is actually bogged down by a few other counters, I reckon. Look at this gash, and yes, banks are in the red, but banks are not leading the charge, in fact. So you've got to keep that at the back of your mind. The Nifty Bank will come up on your screen, about 0.5% lower for the Nifty Bank. Now, just a couple of global charts. One, we need to see what the Dow Futures are up to, and we need to see what foreign investors are doing as well. So foreign investors continue to be net sellers, which is part one. That's okay. But look at what the Dow Futures are up to. And look at the volatility index as well on the global side. I'm sure Devina will mark the Indian piece, but I just want to mark a couple of factors there. One, the Dow Futures 60 points in the red, so certainly off from the lows of the day. So that is part one. Part two, CBOE VIX had hit record highs of, I think, 90 or thereabouts, currently at about 78, if I'm not wrong, 77.67. And if indeed the setup is the way it is, there's a super spike in the making, which might take it back to levels which were last observed in 2008. So you got to keep this at the back of your mind. And India VIX, I think, is following that. And now let's get the heat map up on the screen to show you what's moving and what's not within the index. I think HDFC Bank, Kotak Bank, etc. are all moving up. They've given up those gains. Got to keep that at the back of your mind. Look at that. HDFC Bank was, I think, up about 4% now, just about 1.5%. Kotak Bank was up 6% at a point of time, now just about 3%. So that's the thing. It's just very, very volatile, and every rally is getting sold into. What about the losers, though? That's the key point. Bharti Infra continues to languish, down 14. Z continues to languish, 13. Yesterday's gainers on the PSU side, the likes of ONGC, etc., are all getting sold into, down 9, and giving it company are Coal India as well as BPCL. And autos are taking a serious stick. Look at Maruti, look at Mahindra and Mahindra. That entire pack has come down. We'll speak to the FADA representatives today, so it'll be important. And Devina, much as we would like to believe that there might be a bottom in store, heavyweights like Reliance and HUL continue to grind lower. So it's not looking a very pretty picture, that brief rally getting sold into.
Yeah, but Bajaj Finance has recovered
a little bit from the lows
of the day as well. And nonetheless, it's heartening to see stocks which have been pummeled 10, 11% like ICICI Bank in yesterday's session. Marginal recovery, whatever it may be, we'll take it in today's session. But just want to quickly look at the India VIX. Neeraj spoke about CBOE VIX. This is the mid-cap and the small-cap space. India VIX is now up 13.5%. That's 72.64. And while CBOE VIX, the high was closer to 19 during the GFC. For India VIX, the high was somewhere around 85.13. So we're very close to making those levels back again. And this is what Neeraj was talking about. But coming back to the broader market space and the moves thereof, let's quickly look at what's moving and what's not from the broader market space. That's the mid-cap and the small-cap spaces. Names will come up on your screen. It is a day of brutality for the small-cap index. There's much more pain there, 5% knocked off. From the mid-cap space, what's doing well is a Sterlite Technologies, talks of a buyback. Max Financial Services, 10% higher. You've got Exide Industries, which is up 8%. RBL sees some relief today. That's up about 4.5%. Nippon Life up 4.5%. And Glenmark, this actually is quite an outperformer there within the broader market space and in the pharma pack in particular. Other stocks that are losing out today and losing heavy is City Union Bank. Remember, we've made a lot of comparisons how this one has actually been a very stable return generator since the time it listed. But I guess there are periods of volatility even for such names. So that stock's down about 14%. Edelweiss Financial Services, yet another 10% shaved off. So I think that's somewhere around 40 now. IDFC First Bank, Jubilant Life Sciences, and Indian Hotels down 8.5%. Small cap index, that's where the much of the pain has come in. Let's start off with the losers first. The Future Lifestyle, again, if you just take the Future Group as a separate pocket, there's a lot of pain there that you can see. Aster DM is down 16%, Just Dial another 11% given up. Care Ratings, VIP Industries is down. Holding steady is India Cements, 2.5% higher. Welspun Corp, Welspun India, PVR today is up about 4.5%. And then you've got the likes of a P&G Health, Aegis Logistics, which are holding okay. But let's also get in a sense of what's happening in the futures and options space. Agam joins in for that. Agam, good afternoon.
Good afternoon. There's a little bit more weakness, but of course, after the kind of recovery that we've seen on an intraday basis, well, things are looking just a tad better. But when it comes to the open interest, that is still higher, as much as 8% for the Nifty futures. The banking Nifty futures, which are also under pressure, are looking at a little bit of an increase in open interest. Is the India Volatility Index that I'm actually interested in, because we may have seen a recovery, but the VIX is up 13% at 12-year highs at 72, and that remains a concern. As long as the VIX is well above the mark of 60, 70, there's always going to be a bout of volatility which may be around the corner. Moving in, let's talk about your options as well, and where we are looking at, rather in the stocks, we have Max Financial, which is looking at fresh longs at this point, considering a 7.5% increase in its spot price. But moving on, it's been a mixed day of trade. So we do have RBL Bank, which is also up and about, advancing to a certain extent. Ashok Leyland is under tremendous amount of pressure and is down 23%, which is why we're seeing more shorts building into the system as far as Ashok Leyland is concerned. And besides that, we have Bharti Infratel, which is also under pressure. That's down 14%. Selling coming in for this one. It's, as I've said, it's a mixture of trade, and we have enough number of losers as compared to gainers. Wouldn't exactly say it's turning out to be a really, really good session, but given the kind of recovery that we are seeing right now, there's some amount of respite, if I can call it that at all.
All right. Agam, thanks very much for that. So keep an eye out on what's been happening in the futures and options space as well. But the globe is what deserves more attention. The markets have been falling amidst the scare of the coronavirus scare. But Mark Matthews of Bank Julius Baer says that the fear could be lesser if the US shows that it can control the spread of the virus. Listen in.
Is this a test for diversification? I mean, the whole point was to hedge potential losses, but you can't hide anywhere in this market.
Well, you're right. And unfortunately, what happens in crises is that volatility goes up. And when volatility goes up, pretty much everything correlates. And so it's a total replay of what we saw 12 years ago. Everybody is in a state of shock right now. I mean, it's the fastest drawdown, I think, since 1987, perhaps even more. But unlike 1987, it's not just driven by computers. There's something really nasty behind it.
Where are the opportunities in Asia, cross-asset, as far as you're concerned? Are you willing to step in here, even with just a little bit of your portfolio?
So I'm going to give you the worst answer in the world, which is what everybody else is saying, which is that, in a month from now, who knows what it's going to be. It could be up 50%, it could be down 50%, or somewhere between that range. But if you're buying now on a 2 to 3 year view, then I think you'll make a lot of money. Of course, nobody wants to hear that. They want to hear what's going to happen in the next month. And I don't know. I think it largely depends, as I said earlier, on the ability, particularly of the United States, to show it can suppress this virus. And I think there is the buying opportunity, really, of a generation in many things, including here in Asia, because this collapse has happened so quickly.
Okay. Well, that's the view from Mark Matthews. Buy opportunity of the generation in certain pockets. The question is, who has the cash to do that right now? And where should one find this opportunity? Let's try and talk to our experts from an India perspective. Brijesh Singh of Stock Access joins us right now with his thoughts on the charts. On the fundamentals, G. Chokalingam of Economics Research Johnson. We'll ask him about specific ideas that he may have as well on certain businesses. But Brijesh, to you first. It's been a slightly tricky day in that it's been more volatile, and there have been some upward bounces as well. Is there an index trade that you have for the day?
Good afternoon, Neeraj. Regarding with the index, trade has been concerned. Right now, I'm not having any of the confirmation sort of things. Only the we have seen Nifty, going low to the 78.20 around. Also after that, it has given a bounce back, but it has to be sustained. So it's very volatile right now. As soon as you come up with the trade of buy or a sell side, your stop loss got triggered. So better to be still to be away from it. But it looks like a small. I would be saying it looked like small sort of thing. Like we might see a bottoming out at this range of say 7,800 to 8,000 odd level, and minor pullback can be seen. But whether it would be sustaining or not, that is another question mark. But purely from a chart point of view, it looked like we might try to sustain this in this zone of say 7,800 to 8,000, and we might see a pullback. Now this pullback can be lead to a level of 8,650 followed by 8,900. So I'm looking Nifty, if it holds on this swing low, or whatever today has been made, somewhere around 1,700 odd level. So I'm looking Nifty taking this value of 1,700 and on the higher side 9,000. So I'm looking this level to be sustaining, and if we sustain, then well and very good. So right now no trade from indices, but it looked like we might try and make little bit of bottom, and after that we might see a pullback.
So no trade on the indices. Right now you're watching out for individual levels, keeping 7,800, which is today's low, as your base. But what about stocks then, Rajesh? Is there an opportunity to start trading, looking at some of the stocks that have already picked up in today's session itself, a little bit of a bounce coming back into the likes of HDFC Bank, Bajaj Finance, which have been heavily sold?
See, as I have said, this bounce back has come up, but whether it would be sustaining or not, that is a big question mark. So still overall trend of individual stocks are still on the negative side. So in that negative side, but the stock which is looking a little bit promising for the upward is DV's Lab. DV's, after making a low of below trading below 1,700, and after that we have seen a stock shooting up. So right now the stock is quoting at 1,870 around. So one can play long in it with a very strict stop loss of 1,835 and play for the target of 1995 to 2,000 odd level. Time frame to hold the counter would be 1 or 2 days. That's it.
Okay. By the way, I must say, as we speak, the banks have now joined the indices, and I think they've given up the gains. If we can get the Bank Nifty MRR, and just look at the banking index as well, it's 333 points down. So all those gains that were made are getting sold into. I wonder if the HDFC banks and the Kotak banks are a lot lower than what they were when we started the show. HDFC Bank very, very flat now, getting ready to break into the red. Kotak Banks 3.5%, but certainly off the highs quite substantially. G. Chokalingam of Economics is with us, as I said. Mr. Chokalingam, thanks for joining in. I want to start off straight off the bat with that. Are you worried about the asset quality issues in HDFC Bank, Bajaj Finance, Kotak Bank, or do you believe that the prices and the valuations that they are trading right now at bake in those damages?
I'm not worried about asset quality of any of these banks right now. I am more worried about the deflationary impact which can happen if the COVID-19 spreads through community. So according to me, the stocks have fallen by about 47 trillion rupees from the peak, and the Sensex itself is down 32%. Largely priced in for the pain which already known to us. But I am uncertain about what more pain can be there because of the deflationary impact which is possible on account of any possible community spread. So I am keenly watching this spread of the disease, and I would wait for another week's time before taking any call on the market. So last 8 days, mostly we stayed away from buying any stock. We have been selling only, except 1 or 2 stocks which we bought by mistake last week, thinking that things have bottomed out. But now I think still it is a little early. One has to wait and see, at least for next 1 week, because this 14 days, 28 day cycle impact for the spread would be a little more clear by next weekend. So therefore I am waiting.
Okay. I'll come and talk to you a little bit more about a few other pockets, and I want to talk to Choka about the auto pocket. But before that, the Federation of Automobile Dealers Association of India has approached the Supreme Court again, seeking an extension of sale and registration of BS4 vehicles till May end, as retail sales have taken a hit due to the coronavirus spread. Vinkesh Gulati, Vice President of the FADA, now joins us right now to talk more about the same. Vinkesh, thanks very much for taking out the time. Give us a sense of the situation on ground and what are the numbers in the month of Feb? Obviously, you have seen registrations going up marginally, though not a big amount for two-wheelers. Passenger vehicles, CVs has gone up 13%. Passenger vehicles is down 1.2%.
So actually, we were seeing this downfall for an year or so. But the BS4 and BS6 transition gave us some positivity of pre-buying in February. So that was majorly in two-wheelers. As passenger vehicle, BS6 vehicle has already been launched in January and for some OEMs before also. So we couldn't see the pre-buy. So that's the reason where we could see the February growth, what our release suggested. But that was only February, and then this virus scare has gone up. Now the situation is tense, and it's in a bit different situation on the ground. Talking of greens is not what is happening. We are really stressed. Whatever we have planned for BS4 and BS6 transition, that these stocks will be liquidated well in time before 31st March, and there will be not a major stress in the auto retail for March, which is because of this virus scare, is really feels a problem. That is the reason why we have gone to the Supreme Court actually.
So, Vinkesh, if you can give us a sense of how much stock is lying at the dealer level. Is that a substantial sum, which is a big worry, and the transition is not happening, and it could actually get worse as we see demand slumping in the next few months if coronavirus doesn't come under control?
So actually, 3 days back we had done a survey and we had come out with some data, whereas two-wheelers were around 8,35,000 vehicles in the market as of 3 days back. The passenger vehicle of BS4 was just around 18,000, and the commercial vehicle was around 12,000. So passenger vehicle and commercial vehicle are good enough. If whatever the current situation, if it is continues, it won't be a problem liquidation before. Obviously, if the situation worsens and the messages of lockdown, Section 144, if this all continues, then a different perspective will happen. Our major tension and the pressure is on the two-wheeler stock, which is 8,35,000, which on a normal month, a two-wheeler is sold around 12 lakhs. So seeing the current month, this was good enough a stock if the market situation were positive for us. But as of today, we are confident that we will not be able to liquidate all the BS4 stocks by 31st March.
Okay. Any indication as to when exactly you'll be able to get a sense of whether this extension has been given to you or no?
It's very difficult to predict what Supreme Court will decide. As of today, we are trying to push that because Supreme Court is only hearing the urgent matters. We are trying to push the bench to at least hear us out, which we are hopeful that they will agree. And we'll put our point in front of them. Seeing the virus scare, seeing the health issues, and a lot of directives of the government, they are also considered. They also know that it's not possible that this transition can go as per the dates already decided. We hope we'll get a positive, some relief from the Supreme Court, but it's just a hope. Let's wait for another 2-3 days and see how it boils down.
What's happening at the company level with regards to the BS6 models, and if at all, this doesn't go through and you are stuck unsaddled with the BS4 inventory, you will still have to start churning BS6 models. So pre-orders with regards to adding more inventory of BS6 models? Is that the next step for you?
See, practically, it's a very difficult situation to comment on that today, because if a dealer is straddled with BS4, he'll obviously not be able to have that money for turnover and stock on BS6 again. So for passenger vehicle or commercial vehicle, it can be possible, but for a two-wheeler dealer who, if he has a 15 days stock of BS4 and he's not able to sell because of the guidelines, and OEMs don't come up and support us and take back the vehicle, obviously he'll die on his own. He'll become bankrupt, because the margins earned by a dealer is not so huge that he can take the hit of the cost of 15 days stock. So obviously we are not able to think on those grounds as of today. Obviously we are expecting the OEMs to come up with good schemes. I heard Hero just came up with very good schemes a day earlier, yesterday only. So I'm expecting these kind of schemes if OEMs come up and give newspaper ads. Obviously, the walk-in has gone down, but still, if we are able to liquidate thing with heavy discounts and scheme, it would be a better situation to come by the 31st if Supreme Court doesn't support us.
All right, got that. Venkesh, thanks very much for joining us. Really appreciate you taking out the time. So definitely a lot of pain that's there at the dealer level with regards to two-wheelers. They're not being able to get rid of their BS4 stock, still have quite a lot of inventory left, more than 8 lakh units there, which in a normal environment would have flown off the shelf. But environment is tough, market is tough, and therefore they're saddled with that inventory and therefore want an extension to the date, pushing it back to May. Stocks within the auto pack, TVS Motors up about 1.9%. Maruti Suzuki is not having a good time. M&M is not having a good time. Tata Motors is the other one, a double-digit stock now. So we've been talking about it for quite a few days. But Choka, just come in on in the autos, specifically the two-wheelers, and what happens here on.
I would stay away from buying auto because the whole society's worries on the virus and the investors' worries on the deflationary impact of this virus. So let us understand the fact that 65% of the GDP is coming from service sector, and that is affected most by this virus fear, not manufacturing or agriculture. So therefore, the impact on the whole economy would be quite substantial in case it spreads through community. So therefore, the investors, I would say that can wait on sideline. Particularly, this as far as the stocks in auto sector or realty sector or NBFC is concerned, there would be little more pain. If at all one wants to invest, they can look at high dividend paying companies and also probably the pharmaceutical company. Because of the fear, a lot of people are taking care of health, existing ailments also they are buying a lot of drugs. Similarly, for dividend yield, we fortunately completed almost 11 months of this current calendar year, financial year successfully. So therefore, for FY20, a lot of companies would be able to maintain same dividend which they paid in 19, considering the fact that there is a substantial erosion of the wealth. So then again, if you move on to FY21, I'm pretty confident that whatever damage happens, it all will be done before December 31st. Because every country, in a matter of 2-3 months, it peaked out and then started tapering off. So that would happen in India also. So therefore, once again, we can hope for a decent dividend in 2021 as well. So therefore, only these two segments I would suggest if at all somebody wants to invest. That's what we also do. Our strategy is also not to book substantial losses in dividend yield paying companies and pharmaceutical companies.
Okay, I want to pull up Ashok Leyland, by the way, and there are a lot of queries around that as well. The stock is down in the session, 23.74%, 49 rupees for the stock. And remember, I think they've sought approval or going to invest some large sum of money into buying that stake in the NBFC business. I reckon that's probably one reason, because that dividend rupees is just about 0.5 odd rupees, so that's really not the thing. Before I get Rahul Shah's view on that, and he would probably have a view there too, but Mr. Chokalingam, what do you make of this move from Ashok Leyland's side? The market clearly doesn't seem to be liking it.
Yeah, I mean, I think in this case, market is right, because before this COVID issue came up in the world, the commercial vehicle space was getting hammered. I mean, a strong double-digit degrowth we had seen. On top of that, now this deflationary worry is coming. So obviously, the CV space would be the most impacted. So I would still suggest investors to stay away from, CV players like Ashok Leyland.
Mr. Chokalingam, but what do you make of this piece that acquiring about, I don't know if you have a view here, acquiring that 19% shares in Hinduja Leyland, that NBFC arm, is that a smart move or is this something that the markets are frowning over?
I think this is not a smart move at the current juncture when there is so much of worries about surging NPAs for the lenders, because a lot of borrowers are impacted, and obviously the NBFCs also would be impacted. So probably they could have postponed it, but I don't know. They maybe have a better explanation. But certainly, in my view, this is not the right time to invest in lending business.
See, I think viewers, that's the point. And Rahul Shah of Motilal Oswal is with us. Rahul, good morning, rather good evening, good afternoon, excuse me, I'm just getting a bit lost here. But I don't know if you guys, before I get to your views on the index and specific stocks, I don't know if you guys spoke about Ashok Leyland in the meeting today or in the calls today, but this proposal to acquire a stake in Leyland Finance for 1,200 crores, that clearly seems to have not gone down well in the session today for Ashok Leyland.
I think yes, way the things have happened, I think yes, looks like it's not gone well for the Ashok Leyland. The core business has to be the core business and not merge with something else. So I think that's what the street is reacting negative with it, and it is down major in today's session.
What's the thought there, Rahul, on Ashok Leyland going ahead now, either technically, derivatives or fundamentally? And then if you can tell us what is it that is standing out for you right now in terms of specific stocks or the index as a strategy?
I think looking at Ashok Leyland, I think we have seen the entire market getting beaten up. So your auto stocks are not left over. And auto started its party before the market started it, the sell-off. So my sense is I think there could be some more pain in Ashok Leyland. With today's fresh short addition also looks like that there could be some more pain of 10% downside from here. So I feel that could be some more with a reward of maybe with a stop loss of 50.5. One can go short with a target of 42.5 or 43 in Ashok Leyland. That's what looks like near term.
Okay, at ITC, they have spoken about a new dividend policy where, they're looking to distribute about 80 to 85% of the profits through this policy. The stock's up about 6.5%. A stock which had completely lost all interest is now seeing some amount of buying, but this could also be very short-lived. A quick take, this move on ITC, Brijesh, does it do anything from a trading standpoint? Does one get excited, enter the stock, or just stay out?
Overall trend has still been down. But if someone is looking for an investment point of view at this rate or anywhere below 150, then one can look out with a stop of the 120, play for the target of 185 to 200. But for trading point of view has been concerned, still overall trend has been down. So if someone wants to play with the trend, then I would be suggesting present rate or any rate 165, one can use to go short with a strict stop of the 168 and look again back for the target of 135 to 140.
Okay, I just want to pull up IndusInd Bank also. It's the stock on the index that has been beaten the most. It's now at 440, yet again another 4%. Not the kind of cuts like 33% that we saw yesterday, but the selling pressure just keeps adding up. 27.4 million shares on IndusInd Bank. Indiabulls Housing is at 98 rupees. That stock's down 30% in today's session. I mean, 52.5 million shares. To look at the AV80 function of this one as well. But at a point in time when they got that clear chit, with regards to some of the dealings and operations, the stock had actually started moving up pretty steadily. The last 3 months, the last 6 months, just should look at the stock and see how it's been performing. But obviously this sell-off has aggravated the pain in some of these names. Last 1 month, the stock has lost 67%. Comparable to some of the others as well within the same space as well, but volumes have really surged. Rahul, do you track Indiabulls Housing?
A difficult question, but I think where the stock has been, looks like there could be free fall in the stock in last few months. So I think the stock has been hitting the newer lows in like a couple of sessions. So I think I continue to remain bearish. I have been bearish in this stock for quite some time. So I think there could be some more pain. There could be another 10% fall easily will not be warranted. So I think one can still initiate short in Indiabulls housing.
You can go ahead and initiate fresh shorts in this stock as Rahul believes there's more downside left into the counter even after this 28% fall in intraday trade today. Glenmark Pharma, one stock that is outshined the rest of the pack. Pharma is seemingly better off compared to some of the other pockets as well. 204 on Glenmark. Last few days has had its fair share of sells as well, but has been able to wither damage slightly better than the rest. Last 7 days, the stock's done about 23-odd%. Last 1 month performance, about 35-odd%. But nonetheless, there has been selling there too. What about pharma, Choka, and how do you position yourself here?
Yeah, as I mentioned earlier, pharma is one of the segments which can survive this crisis. A lot of people are buying, all sort of medicines for the existing ailments. And also, after this bitter experience, in my firm view, the US FDA would slightly compromise on the quality standard as far as these US FDA inspections of Indian plants are concerned, because we read that they have been going through a lot of shortage of drugs. So, therefore, recently, because of the stringent quality practices measures, the exports have been impacted from India. So one can hope that, I'm not saying that there will be a compromise, but at margin there could be some flexibility in terms of encouraging more exports of drugs to that market. So one can definitely consider, a stock like a Lupin, which gets almost 3/4 of the sales from US and Indian domestic market. So my view is that such companies would be benefited in the short to medium term. So therefore one can consider stock like that in pharma space.
Got that. Choka, great to have you and get your sense as well. Thank you so much for joining us. Well, while we're talking about equity, there's one more asset class that you need to pay heed to. Gold prices have moved higher after registering losses amidst a global sell-off. Somasundaram, PR Managing Director, India at World Gold Council, is joining us right now on the show to talk about the outlook of gold for the rest of the year. Mr. Somasundaram, thank you so much for joining us. Let's talk about the fact that, while the rest of the other asset classes have been selling off, gold after the initial spike also saw its fair share of selling. Mostly in order to fulfill those margin calls, has been selling in gold to recoup losses in the equity market. But leaving that aside, from the short-term perspective, what's the stance at the World Gold Council with regards to gold demand, with regards to gold prices?
Well, as you know, we don't generally forecast the prices, but we do we do point out factors that play for and against prices. Coming back to first on the demand side, obviously, weddings drive most of the demand for physical gold in India. And we do believe, given the situation that we are facing and a lot of social restrictions as well, this will get affected. Not to speak of the huge volatility in prices that we have seen, which generally puts off consumers. So both the factors put together, we do believe that it will be very, very muted. In any case, the first quarter is not exactly a great period. But generally, in a normal year, around this time, demand will start picking up, and then it will move into Akshaya Tritiya. We believe this will be very muted this year.
At times, Mr. Somasundaram, obviously before the entire pandemic issue unraveled, gold had been soaring, making 6-year, 7-year highs. And do you feel that particularly that was also on the back of the central bank demand that came in, the uncertain growth environment, the challenging environment because of the trade wars, which now obviously are on the back burner, but economy is still struggling. It's going to struggle for a while now. And therefore, besides the fact that there is an initial volatility for gold, the stability will come back in and drive gold prices and demand higher once this entire issue settles down.
Certainly, and with all the additional QE coming in, there will be more money chasing. Certainly, all those factors do point out that gold will have a good run, probably once this crisis is over. But we should also look at the other side. While certainly gold is going to be a very good performing asset class, let's look at the alternatives. Equities have come down dramatically in a very short time. And if you really look at, forget the people who probably are sitting on mark-to-market losses, etc. But for a person who is going to invest fresh, now equities also now become a very attractive buy opportunity. We shouldn't forget that. Yes, gold will perform. Gold will certainly, with the kind of money that's going to be chasing, it will rise. But let's not forget that equities have dropped so significantly that they will also offer enormous competition to gold once this crisis blows over.
So in light of that, Mr. Somasundaram, obviously point well taken. Equities are looking extremely attractive. Valuations have come down, prices have come down, and therefore for somebody looking to invest in a slightly riskier asset would prefer equities over gold. But just give us a sense of the kind of demand damage that you envisage, because now obviously weddings we are going to see the reflection of that in the jewelry demand as well. We've got initial feelers that it's not going to be a really great season. Do you feel that that's going to dampen the sentiment a bit more in terms of demand, and how much of a demand curtailment are you seeing specifically from India?
You see, we have already seen it last year when the prices jumped since August. We saw a 22% rise in price between August and December, and we did see demand drop nearly 9% last year in India, 15% in China. So this was before the crisis, let's be clear. So when the prices shoot up, certainly people do tend to look back, although we have always proven with research that long-term incomes determine demand in consuming markets more than short-term factors like prices and monsoons. So long-term, as income goes up, demand goes up. But short-term, prices do have a significant impact. Coming back to the current year, again, it started rising, and now you have seen huge volatility. So we would think that this will certainly affect demand. Absolutely, there is no doubt about it. Now, how much, we have to see how, because this is right now we are in the middle of many things happening, not just to gold, but to every other asset class. So it will be very difficult to estimate. But gold demand, on the other hand, doesn't just disappear. You see, it just gets postponed. It's not like a consumable, right? I mean, if you don't buy now, you're not going to buy twice as much in the future. But gold is something which, people have a certain amount in mind, certain quantum in mind, and they just find the right times to buy. So I would, while I'll say, yes, temporarily there will be some interruptions, I wouldn't think that this demand will be lost. But as I said, it might have, in terms of period, you might still have a struggle as equity markets starts moving up. You'll see more money moving into equities because certainly that at this moment of time, from what the experts say, it appears very attractive. But gold will have a good run in the next few years. Going by what's happening, particularly because of the additional QE that's coming in, the drop in the interest rates that are being demanded. All of that is going to reduce the opportunity cost of holding gold.
That's true. Mr. Somasundaram, thank you so much for joining us. Really appreciate you taking out the time. So, the pros are stacked up in favor of gold prices from a slightly longer term perspective, but the short term volatility, it could take a hit. Also, pitting it against equities, which look all the more attractive at these current prices.
Yeah, it's interesting. Let's wait and watch what happens there. Now, speaking of equities and what are the pockets that one should watch out for, a lot has been spoken about specialty chemicals and how some of those companies might be immune. But there is MK Securities, which has come out with a note yesterday or day before that looks to quantify the impact of the coronavirus spread on some companies. Yash is here to take us through the details of that note. Yash, good afternoon.
Good afternoon, Neeraj. So, as you rightly mentioned, they did come out with a report a couple of months back when they highlighted how some of the specialty chemical companies would in fact benefit from the coronavirus outbreak in China, as most of these chemical companies in China had to shut down their production capacities, and that would mean the transfer of some of the business to Indian names. However, since the time of their last report to now, the coronavirus outbreak has spread to more than 155 countries globally, and as a result of it, the outbreak has now reached more countries, and that would be negative for some of these chemical companies having exposure, or rather large amount of their revenues coming in from the exports business. So they have calculated the total exposure in terms of their total revenues for the top 10 countries which have the highest number of coronavirus cases. And while SRF and Sudarshan Chemical have the lowest exposure, it's between 9 to 10%. The likes of Vinati Organics has the highest, of almost 63% of their revenues. We had spoken to them earlier in the week as well, and they said 75% of their revenues come from the exports business, and 63% of that is from the top 10 countries which have the highest coronavirus cases. And on average, the other names as well, be it Naveen Fluorine, Camlin Fine Sciences, Tata Chemicals, Aarti Industries, Atul Limited, as well as Fine Organics, almost 25 to 50% of their revenues, they come from these countries. And with the announcement of partial lockdown in these countries, and most of these countries going into a state where production would take a hit, that would mean that it would be a big negative for some of these countries. Now, that apart, although we've seen significant measures being taken in terms of pollution control in China, it continues to remain one of the dominant players in certain chemistries, and analysts believe that although with all this disruption, China continues to remain a strong player, and it might be an uphill task for these chemical companies to take over from China and grow faster than what was initially expected. We spoke to Vinati Organics about a week or so back, and this is what they had to say with respect to the drop in rupee as well as lower crude oil prices. They said that lower crude oil prices would not be negative for their ATBS business. ATBS is almost the largest business, almost 60% of their revenues come from there. And what they are saying is that because of this disruption in China, one of their largest competitors has had to shut shop, and they are seeing increasing number of orders for the last quarter as well as the ongoing quarter. So that would be a big positive. Additionally, the rupee depreciation, that should also aid the company's financials. But overall, brokerages as well as companies are yet to have a better understanding with respect to the coronavirus outbreak on their financial performance, and they would wait to understand much better the implications of this.
Well, thanks a lot for that, Yash. That puts things into perspective, at least from an MK Shares and Stockbroker. So that's an interesting note, and just bringing out for you. Gurmeet Chadha of Complete Circle Consultants is with us as well. Let's just first have that question on Gurmeet in the specialty chemical space. Thanks so much for joining in. Which of these companies would be relatively insulated to your mind?
Neeraj, I don't think so anybody is insulated right now. I think we are in a phase where we should stop analyzing in terms of who will benefit from supply chain. I think that the limited mobility and lockdown will continue. But since you spoke about specialty chemicals, I think we like Aarti and SRF more. Aarti largely being benzene based, and since it's a converter and to a large extent also cushioned off from the fluctuation in the raw material prices. The promoter seems to be decent, and so we like that. But I think right now, I think the best strategy right now is to just buy something which you think, and I might sound very bearish saying that, is that something which will survive after some time. I think that's all you got to see right now. See the balance sheet has strength, and the near-term impact on earnings, and it won't impact you in the long run. So companies with good cash, stronger balance sheet is something you should be buying. I think, if you're getting Bajaj Finance, you are getting it at 2,500, which is at a peg of less than 1. I'm talking about peg right now because, the book, you might have a re-rating on the multiples also, the way things have been. So I think look at something which you think will sail through these turbulent times, and you are getting, the bluest of the blue chips cheap by 40-50%. And at the same time, I'm not in the camp of saying that let's wait for things to stabilize, and then the market's not going to whisper you that it has bottomed out. So you should be in two camps. One camp is you don't do anything, let your SIPs and all continue, and the second camp is you have to keep indulging yourself with every fall. So let's say a Kotak Bank intraday, if it moves 20%, seemingly it's still not stable. So, by the time you think it is stable, it might be just, it might have just moved back to $1,400-1,500.
Okay, that's Kotak Bank, which is still okay today, along with HDFC Bank. What's not okay, and since we're talking about volatility, and since we're talking about Bajaj Finance, that stock now is back down 11%. At the start of the show, we took a check, and it was, I think, down 3.5%. Now it's back down under 10%. So 2731. Gurmeet is talking about levels of 2500 on Bajaj Finance. Unthought of, but well, this is reality.
Indiabulls Housing Finance is
Indiabulls Housing Finance, yeah, that's at 85, I believe, 83 now. So that's almost 40% washed out. 66.66 million shares on Indiabulls Housing Finance. Should look at the other group stocks as well to see if there is any impact on the likes of Indiabulls Ventures, Indiabulls Real Estate. Indiabulls Real Estate obviously locked down on lower circuit. I mean, and I guess this, and in Ventures too. So this 5% breaker gives it a little bit of leeway. But Housing Finance, nope, that one's all the way out. 40% given up. What are you making of some of these, groups and how markets have responded to them? The likes of Indiabulls, Gurmeet, Indiabulls, Future Group. Every other stock within the Future Group is down and out. Now there's some issues within the Hinduja Group. Do you feel that one needs to be mindful of where they take a position, irrespective of what prices have done?
Absolutely, Devin. As I said, if there is a stress on the balance sheet or in the market, and I've been saying this, the bond markets raises the red flag much earlier. So Indiabulls was AAA, and a year back, and still that time it was borrowing 200 bips more than the usual AAA. And some point of time they were unable to raise too much money. They did a smart thing by shrinking the balance sheet and conserving cash and survive that. So as I said, anybody with weak balance sheet, slightest of doubt will so just don't go after price correction that something is down. What is down 70% might be expensive, and what is down 40% might be very cheap. So you have to be very focused on and I keep saying this word quality. And as I said, it doesn't matter if you get a HUL at 45-50 PE, because we know that the consumption will continue, and the way we are seeing frantic stockpiling happening, there will be a visible shift in the behavior also. So I was speaking to a few clients of mine who are vendors who supply hand pumps and some of the other things, including packaging, to the leading MNC. They are now realigning their order supply chain for next 12 to 18 months. So people who think that the impact on consumption behavior will be 2 months, 3 months I think will get it very wrong. So you be with the best guys right now, and that's where the opportunity is. If you can get them 30-40% cheaper, keep nibbling in. And we have seen 2003. I have seen. I'm not saying we, in the sense that since I started my career, I've seen .com bubble. We've seen 2008 paper tantrums. I think we will sail through at some point of time. So you just need to keep your nerves right now, and only look at things, as I said, which I say the bluest of bluest in terms of quality and blue chips.
By the way, the index is down 3% yet again, so keep that ticker monitored. I wonder what the Dow Futures are up to, and I want to get in Brijesh Singh on this. Dow Futures, just about 1%, so I think some nervousness in the last few minutes for our markets individually. Brijesh, very quickly, these financial names, and I'm taking both of them in the same breath, but both of them are very active, and that's why, and then we'll get in final thoughts from Rahul as well. But Brijesh, to you first. Indiabulls, what do the charts suggest? And then Bajaj Finance, what do the charts suggest?
Indiabulls Housing Finance, if I'll say one word, it would be fully in the bear grip till it's been trading below 100. One can look out for the target of 60 or below that also in coming days. Regarding with Bajaj Finance has been concerned, no doubt, since the market had corrected, so do the Bajaj Finance has corrected. But regarding for the long term is been concerned, definitely at this rate or till the level of 2500, one can look out to buy. And a small SIP sort of.
Is there a support level in mind, Brijesh, for Bajaj Finance?
Bajaj Finance, see, I would be suggesting for the Bajaj Finance, still more room has been left for a downside. 2500 would be the first level to watch, followed by 2100. So ideally, if you look up for the long-term time frame, then 2100 would be the ideal level to go long in it. So till the time 2100 doesn't come, it look like more pain would be there, and in coming days we might see Bajaj Finance correcting more to the level of 2100.
Okay, I think this dividend change policies work wonders for ITC. That stock is up and active today. If Rahul Shah is with us, or else we'll get him in a bit. But look at that move, 8% higher, and the dividend yield policy change certainly working wonders out here. Gurmeet, any thoughts here on ITC?
looks very tempting, Neeraj, at these levels. I think the stock has been battered more than it deserved fundamentally, and but such is the market right now. And you rightly pointed out, I think at 155, 165 range, the dividend yield, assuming if you take the last 3-4 quarters earnings, would be anywhere between 7 to 8%. So I think, and I think relatively, I mean, and it's not that everybody will get impacted. Relatively insulated. I've been also doing channel checks, and there's been very good response to the FMCG segment, both the Ashirvad brand as well as Sunfeast, and also I think, but cigarettes is still almost 80%. So relatively better play, but I would still prefer an HUL Dabur to go with it, at this juncture on the consumption space, if given a choice on the FMCG front.
By the way, speaking of gainers, the other one that is gaining today is Phoenix Mills. It's now up 19%, and I doubt it's just that one ambit note which would do it. Yes, they would have spoken about some other things, but Phoenix Mills, very strong up move today, 659 and counting. So strong show. Let's wait and watch if this one lasts. 100 odd rupees on a day when the markets are looking at a 2.8% downtake, and when blue chips, Bajaj Finance is one, but Axis Bank and Maruti too are getting hammered. I wonder, Gurmeet, I mean, there are fears around a lot of banking stocks and the NPAs in banks and NBFCs possible because of this thing. Axis Bank is just getting rogered. What's happening here?
Yeah, undue, clearly in the oversold territory, Neeraj. I think the balance sheet is much stronger. Last 2-3 years, they've done a lot of repair. The focus on retail is pretty good. Good by both. I mean, Axis at the current price. I mean, now you're actually getting private banks between 1 to 2, book multiple. And as I said, look at PEG more than the book or the P in isolation. I think that should be a better judge. And some of the other also, I see. So what happens is, once you have a Yes Bank kind of a fiasco in an environment like this, it has collateral damage, and I think Axis is. So I think you can either buy the top ones, and there are some clients of mine who are simply buying the Bank Nifty. I think that probably is a better way to play it. Even SBI in the same breath. I think it's been corrected far too much than what the fundamentals warrant. But such are the time. Panics have no levels, and you have to keep nibbling in if you are a long-term equity investor.
Okay. Closing strategies then, and Brijesh, one very quick closing strategy from your end. What is it that you would trade?
Both of the sell side. Number one is UPL. I think, if I'm not mistaken, it's been quoting somewhere around 294. One can play on a sell side with a stop loss of 302. Play for the target of 282. SCL Tech, again looking for a sell side, 410 or 13. It might be quoting, if I'm not mistaken. Play with the stop loss of 422. Play with the stop loss of 422, look for the target of 392 and below that.
That's HCL Tech, and Brijesh is recommending a sell on that one. Just want to look at SBI Cards, what it's doing today. I mean, what a week it's been. 16th was its listing. It's this week that it listed in, Monday. 691 is where it's at. So, well, technically not a bad week, because this week has been pretty disastrous from the rest of the market standpoint. This stock listed muted, was down to about 661. I think today made a low of about 660 odd. From there is now at 691. Gurmeet, would you subscribe? Would you buy this stock now? I mean, you're getting it at sub-issue price.
Divya, come again. Which stock? Sorry, there was
SBI Cards. SBI Cards.
Yeah, I mean, good play. You have the second largest in terms of both the outstanding number of cards outstanding. I think the rural reach is something which will play out very, very well. So one can keep. You are getting it. There was a time when there was a 350 rupees grey market premium, and at time I remember our discussion that we did advise to subscribe without leverage. And obviously could not see this sharp correction coming in. So it's a good add. I think one can add. But as I said, I think stick to the top 2-3 names in financials. Bharti Airtel looks extremely good to me. So I would stick with the top 10-12 names right now, and so we are advising clients who have the liquidity to go about 35% in right now, and then see how things unfold. I think the next 2 weeks, I think we will see the peaking in terms of number of cases. I think, and that's when I think the market right now needs more. So we are starting with monetary stimulus, and then we have fiscal stimulus. I think the market needs to see containment of the virus so that they can quantify the extent of the economic disruption, and then fiscal and monetary. But I think the central banks are ahead of the curve. They have done things at one go versus 2008, where it was gradual. At some point of time, the quantum of QE and liquidity we are talking about will find its way into the market. 4 days, 7 days, difficult to say. And I think that's that point of time probably, and maybe I'm sticking my neck out, you could then see things, if I were to say making about.
Okay. Gurmeet, just one quick take from you. Now that we're talking about looking at earnings performances, and we would have probably started to see a reflection in the April month once the earnings came in. But now that SEBI has given the relaxation for companies to go ahead and post quarter 4 results till the end of June, do you think that this will allow the market to settle in a bit?
I think it's a good move. I think what market also needs is some targeted response from RBI on sectors which will be severely impacted, including aviation, tourism, shipping, and everything. So I think the market would get more relaxed once you see what US did. 10 billion credit protection schemes to buy even commercial papers, so that you could even protect the SMEs and the households. Mind you, 20% of the workforce in US is linked to tourism and hospitality. So I think we have to do more targeted response rather than just a rate cut. Obviously, those are needed just to ensure that we don't have credit freeze and defaults. But a targeted response which will ensure there are no job losses. The market wants to see that this doesn't turn into an economic crisis, and that's what the market is trying to right now factor in. So a targeted response will help. SEBI decision is welcome. I think if government can quickly come up with a resolution on telecom, whatever has to be done post the Supreme Court judgment, a resolution on how the NBFCs have to be dealt with. So I think that will give a lot of comfort to market than just.
Okay, Gurmeet, minute and a half left for the markets to shut shop, stay on. But 2.5% loss for the benchmark indices today, 208 points. It's been very choppy, and after moving into the green, it's come off again, and that should be disappointing because the Dow Futures are not really cracking. But I think the market is fed up of trying to second guess what could happen, and therefore long bets won't last. Almost 20,000 for the Nifty Bank and 2% for the Sensex as well. I think the mid cap and the small cap indices too have lost significant ground. Small caps in particular down 5.5%. Let me talk about the large caps first. Devina will speak about the entire broader markets. ITC 7% higher after a while. You're seeing that at the top of the pile, the buyback or the dividend policy change helping the stock. Bharti Airtel 3.5%. Infosys sees some gains. And it's been a while that we've said this, but HDFC Bank and Kotak Bank are ending in the list of the gainers and would be amongst the top contributors today. There's also some strength in Hero MotoCorp and Bajaj Auto, so not bad going. What's corrected? Bharti Infra, and I think this one and Vodafone Idea have caught cold now the last couple of days post the announcement. Coal India gives up some gains, 15%. Z, another day of crack, about 13%. Shree Cement, not the best entry into the index, 13% lost. And Bajaj Finance, no less, is down about 11%. And then, of course, you have the likes of BPCL, ONGC, Hindalco, and from the auto pack, Maruti and Mahindra also correcting quite a bit. But Axis Bank, double-digit losses yet again for this one. It's just that, Devina, these days, double-digit losses don't surprise. We are almost completely cool with some of the Nifty names losing out 10%. Par for the course, almost every single day.
It's just another day at work. But, just to take a look at what's happening in the broader market space. So, again, we are seeing the dip coming in from the mid caps as well as the small caps. It's not looking like a really great day of trade. Coming down to individual stocks, and there have been a few that have seen absolute carnage, and I'm talking about stocks like Indiabulls Housing. And if you have that stock up, it's down 35% for the day. 87 is where it's going to short shop at. The other one that's witnessing similar pressure is Ashok Leyland, and the stock's down 26% towards the end of this session, so 47 rupees on the counter. Imami is the other one that's seen a drag in today's session, closing with cuts of about it actually picked up in the dying moments of trade. So it was down double digits, and from there you've seen a sudden spike, and the stock's now down just about 2.5%. Tata Elxsi is the other one, mid-tier IT pocket that's down about 16%. Just Dial, yesterday's session saw a little bit of a respite. Today, once again, down 14.5%. IDFC First Bank, M&M Financials, Tata Motors DVR. Tata Motors DVR now, I think 35 or 37 rupees. That's where the stock has come to. Looking at what obviously Tata Motors, the stock itself is doing, but 32 rupees on Tata Motors DVR. Bharat Forge, Delta Corp, IRCTC, all of these names extremely weak. Bharat Forge 12%. IRCTC, obviously, you would want to see it kind of gets stopped out. Day in and day out, you get just like that 5% correction. But obviously, no takers. Stock's 1,000 now. SBI Cards this week got listed. I think this is the fourth day trade, so that's marginally higher by the end of the session. So in the positive territory. Looking at some other gainers in Narayana Hrudayalaya, that stock has seen a big surge in today's trade, 15% higher for Narayana Hrudayalaya. Phoenix Mills 19% the last time we checked. Deepak Fertilizers, RBL Bank sees some buying at lower levels. Remember, a lot of clarifications being put up by RBL Bank and by IndusInd Bank. RBL Bank today is up about 4%. And then Sterlite Tech on the buyback news, that's up as well towards the end of the trading session. It's with gains of about 10%. But we've come to the close of yet another volatile day, and that will show up in the India Wix. But for now, that's what you have, a 535 odd point shave off for the Nifty Bank. Nifty at 8,269.
Let's get the volumes up on the screen and see how the turnover has been in today's session. 53,000 crores, so much higher today, both the F&O volumes as well as the cash volumes, but you would suspect today because of the options expiry. Yeah, but the cash market volumes too substantially higher. 53,000 is not mean, I must say. We've been calling about how 44,000 is not being really high. These days the volumes are high, but 53,000 is fairly high today. Interesting to see what the FI and the DI inflows and outflows would be today. Did I say inflows? No. Or the outflows would look like today.
The India Wix will come up next, just to give you an idea of what we did. So didn't do much in the last 1 hour of trade. I think we were at 72.38 when we started off the show. We're ending with a marginal cut from that level, but it's still extremely elevated, 71.95. And until you don't see this cooling off, there's no saying when this could turn. But just a quick look also at the key contributors, and then we get a closing comment from Brijesh. This is what you have. Today's session led lower by Reliance Industries, which took the index down by 43 points. ICICI Bank, that actually started the last wheel, the last hour in the positive territory, but then one of the key contributors on the downside. And look at the other side, ITC, that's the top contributor on the gainers.
Yeah, and HDFC Bank and Kotak featuring out there as well. Anyways, final thoughts from our experts then. First, a quick technical comment and then a fundamental comment. Brijesh, what does this move in Reliance mean for the stock?
See, regarding with the Nifty and is been concerned, I would be first saying that it looked like still sticking to the where the show started. 78.32 was a low, so till that doesn't break, I would be thinking that this at least it should be hold, or another, say, if it breaks, then another, say, 300 points of rally on the downside can be seen. But it looked like we might halt here at making a low of 78.32, when we might see a bounce back. Now the swing high of today's session was somewhere around 8,500 and plus, so that would be acting as a resistance. So if we are able to cross, then 9,000 would be the next level to watch. But I'm looking this level to be consolidation zone till we are not breaking, because the indicators are now trading on weekly or the monthly. They are trading in the oversold zone, and the price pattern point of view has been concerned, and as well as the time cycle series been concerned, they are giving a little sort of a pullback rally. So hoping for a pullback rally and the consolidation session to be going on in coming days to be seen.
Okay. Well, I was wondering what the view on Reliance would be as well. Quick 30-second view out there, Brijesh. I asked you about Reliance Industries.
Okay, now the Reliance has been concerned. We see the Reliance had broken the 950 to 960 odd level. That was been acting as a nice support. Now, if since that would be acting as a tough resistance, whereas the downside has been concerned, 880 and 830 are the two important levels to watch very. Someone wants to play for a long, and I would be suggesting below 900, one can take a long position with a very strict stop loss of 880, and pullback should be till level of 940 to 950 odd level.
Okay. Gurmeet, a word on some of these blue chips which are getting badgered. You spoke about Axis as being oversold. Yeah, what's the view on Reliance Industries?
Neeraj, I think a grim view in the short run. I think the refining margins are going to be hurt very badly. We already saw stress in the petchem business last quarter. There'll be some respite from retail and geo, but also the debt reduction now, gets extended, which is something I think what was probably also drove the rally, the last legs, which was 20%. So I think neutral on it. I don't see very large downside coming in there. And Neeraj, I think the leadership will change now. It happens with every large correction, especially black swan events. I think there will be a considerable shift. I don't think so. Financials will continue to command 40% weightage in the indices. I think there will be significant re-rating, which will happen. I'm not saying that everything will get reduced, but I think the stronger guys will become stronger, and that's why I said stick to top. I think even in mobility, I think my sense is in the short run, which is up to 1 year, the usage of public transport will go down, and I think that would just be a bit of a blessing in disguise when things normalize for auto. Not really recommending to buy auto at these levels, but you will see a visible shift in mobility which will happen. And I think pharma and consumption to me will lead the pullback whenever it happens. So that is how your strategy has to be in. Look at good pharma names, something like Ipca, Divi's Labs. Keep lapping up some consumption names after 30-40% correction. Do a NASDAQ ETF as a client. I know it's sub 7,000. I don't think so technology is going to die. There will be some bubble in the fintech space though, because that easy tap of money which was available will dry up. And keep doing debt. I think RBI will do a lot of easing. And I think now with 1 year CD being above 7%, your short-term debt offers you now a 10%. And if you avail March, you get 4 indexations. So I was doing a maths. Worst case, you get 7.5% post-tax if you were to lock in for 3 years right now.
Okay. All right. Gentlemen, thanks very much for joining us this afternoon. Gurmeet as well as Brijesh. Really appreciate you taking out the time. And with that, we come to the end of Countdown. From Neeraj, myself, and the entire team that's put the show together. Thank you so much for watching. The Market Wrap comes up next.
According to a recent report, women today contribute nearly 74% of real estate